Today, the White House setting an official deadline for its vaccine mandate. When will employers have to comply? And the U.S. trade deficit hitting a new record high. What's behind the surge? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. Democratic Senator Joe Manchin, who seems to be the biggest hurdle to the Democrats' social spending plans, is again contesting the enhanced paid leave aspect of a new multi-trillion-dollar social spending bill. He's not completely against more paid leave, it seems, but he wants to fund it through payroll tax on employees and employers. Looks like Democrats want to fund it through general revenues. And even though Manchin's come round to the idea, he's still uncomfortable including it in this specific budget reconciliation bill, which the Democrats can push through without any Republican support. House Speaker Nancy Pelosi late yesterday said they'll add 4 weeks of paid leave back into the bill. Democrats had removed it from the package earlier because of objections from Joe Manchin. In response to Pelosi's move, Manchin said today he still doesn't think the provision belongs in the bill. There's also the update on the SALT cap relief that we told you about yesterday. House Democrats are planning to raise the cap from $10,000 to $72,000, and it would last until 2031. The Committee for a Responsible Federal Budget calls the latest proposal costly and regressive. It says it would cost $300 billion through 2025. The Tax Foundation says roughly 80% of its benefit will go to households making more than $200,000. And the Biden administration has set an official deadline for its vaccine mandate. Today, the White House announcing certain healthcare workers, federal contractors, and employees at larger businesses must comply with the new vaccine rules by January 4th. That gives 84 million employees and 17 million healthcare workers 2 months to get fully vaccinated. OSHA and the Centers for Medicare and Medicaid Services will implement the rules. Violations could include fines of up to nearly $14,000 each. You could pay even more if the violation is found to be, quote, willful. A Labor Department official says the federal mandate overrides any state or local laws, but is likely to face legal challenges from Republican states. Business groups have called the administration to delay the deadline or be more flexible. The new rule does allow employees to remain unvaccinated, but the worker must provide a verified negative test to their employer at least weekly, and they must wear a face mask at work. And fewer American workers filed for jobless benefits last week. In fact, it's the lowest number since the pandemic began. Came in at about 269,000, a little better than economists expected. Total number of people continuing to receive benefits also falling to just over 2.1 million. That's also a pandemic low. One employment agency says job cuts for 2021 are down almost 90% compared to last year. Businesses still struggling to attract workers, boosting wages, offering perks. But even though average hourly earnings rose 4.6% in the year through September, factoring in inflation, real wages actually fell 0.8%. That's U.S. government data. So a win on the jobs front, but U.S. productivity is through the floor, down 5% annualized last quarter. Really incredible. Joining us to discuss is Jim Iuorio, money manager with TJM Institutional Services. Jim, great to see you. What's happened to U.S. productivity?
Well, okay, there's a couple things to remember about it. It's a volatile number, but the long and short of it is this: labor costs have gone through the roof. Oftentimes companies replace labor by investments in equipment. Can't get equipment because of supply chain problems, and all supply costs are going up. So it really shouldn't surprise anybody that productivity numbers are down. Now, the wage component of this is the one that people should concentrate on the most. I've talked about this at length in different appearances I've had, is that the government's tact here is they want to raise wages medium and long term. So right now they're currently in a bidding war with corporate America for wages. I'm in the restaurant business, as we've talked about before off the show. Most of the people I know in that restaurant business can't get labor right now. So the labor component of it is really what's driving the collapse in productivity. And, I think it's a self-inflicted wound, so it's somewhat frustrating for me.
It's been, but I think as well, on that point, we all thought in September time, right, when the enhanced unemployment benefits were running out, that we would see this surge of applicants. This is an interesting thing. I'll put it to yourself. I was listening to Michael Every, an economist, recently. He felt that a lot of people who were working pre-COVID, pre-pandemic, have now started to play the stock market at home. And they're investing, they're making lots of money, and they feel that, why would I go back to work? You think this is legitimate?
Yeah, I like when people say that out loud, because I think that too. But when you say it, it sounds crazy. But if just you look at the volumes of day trading, the volumes of day trading options, they've gone absolutely through the roof. You look at cryptocurrencies, which is closing in on a $3 trillion total market cap. Yes, there are a lot of people, and this is amazing to me too, because the problems that happen when you have a Fed that's too easy, when you have a government that injects an additional $7 trillion into the market, the place that it shows up is wildly unpredictable, and it's never usually good. And this could be another thing too. So we both know, I think, what we're saying that cures that, and that is a reminder of risk. So what has to happen for that to happen is, obviously some large size pullback in meme stocks, cryptocurrencies, the stock market. And I believe that is going to come. Times like this never go on forever. I don't see it on the horizon right now. I think it's interesting that I don't see a particular bubble. For me to see a bubble is when I see mom and pops borrowing money to get into a particular asset. When that asset goes, it drags a lot of people with it. I see like bubbles everywhere, which to me then that means all we're seeing is a U.S. dollar that's been depreciated by 25 to 30% perhaps, and that's why all those other assets are going up. But to answer the question, I think I got off the path here a little bit, but I think that that's true about day traders. I think it's amazing, and I think it's a long-term negative.
Yeah. Do you feel, I think we were all expecting, or I was expecting at least maybe more of a reaction in the markets, the stock market, the bond market yesterday when the Fed eventually did announce their tapering. We haven't seen it. It seems business as usual. You think that this, we'll call it a rally, will continue until we really see them fully pull liquidity at some point in the middle of next year?
Right. Well, in 2014, they started talking about tapering. They started tapering, but and the market did fine up until the point where they actually were done buying bonds altogether. And based on this, the path that they just set forward, I think it's about 8 to 10 months, whatever. Here's the way I described it to some of my clients today, is that the Fed, if their concern for inflation was a scale of 1 to 10, the Fed came out with like a 6.5. The market kind of expected and thought that an 8 was appropriate, that they should have been a little more. They're concerned about inflation, and they made mention of that, but they're not quite as concerned as the market should be. And if you're concerned about inflation, you don't buy $105 billion worth of bonds next month, which is what they're doing. And I know it's 15 billion less than what they bought before, but you're still buying $105 billion worth of bonds. So they're not that concerned about inflation. So I think that the train is still running, and I think the equities are still the beneficiary of that too.
We may see the day traders get another 6 months, 12 months out of it yet, Jim. Jim Iuorio, yeah. TGM Institutional Services. Appreciate it. Thank you.
Thank you.
In the midst of labor shortages and supply chain issues, some experts suggest giving white-collar perks to blue-collar workers. NTD's Olin Richards has the details.
A tight labor market means workers can ask for more from their employers. CEO of hourly work online marketplace Snagajob, Matthew Stevenson, sees a phenomenon called the white-collarization of blue-collar jobs, which means compensation and benefits that have typically been reserved for white-collar employees have now become expectations and norms in blue-collar jobs. Benefits include sign-on bonuses, education, career path guidance, family leave, mental health benefits, and so on. For example, starting in January, Amazon plans to pay full college tuition to its frontline workers. The strategy could help boost retention rates in blue-collar jobs. One logistics CEO thinks companies need to change their hiring models and focus more on professional development, allowing entry-level workers to upskill and advance into higher positions. Experts suggest that companies consider these new reward systems to avoid worker shortages. Arlene Richards, NTD News.
So joining us to discuss the Federal Reserve's decision to start tapering back its bond purchases is Danielle DiMartino Booth, CEO at Quill Intelligence, also a former Federal Reserve insider and the author of Fed Up. Danielle, pleasure to see you. You've been following this probably as closely as anyone. What did you take away from the chairman's press conference yesterday?
I took away a high level of discomfort. It was obvious that the media was becoming more and more confrontational with Chair Powell as the press conference went on, because he was trying so hard to dance around answering any questions with any kind of certainty. Everything had equivocation to it, whether, we have to make sure that we have maximum unemployment, and, is inflation hurting Americans? Well, not so much, because it's going to continue to be transitory, but for a very long transitory time. So I took away that the Fed is in a very uncomfortable position, because it's clear that the market and the media and the White House, all of them are pressing the Fed to move forward, hurry up the taper, and move on to hiking interest rates, which we saw with the Bank of England this morning. Which of the big five is going to go first? And they're all scared of their shadows.
Because we talked recently, you were afraid the economy maybe was slowing a little bit. The Fed would be more reluctant to start tightening too soon, if I'm not mistaken. But we did see yesterday the services data was red hot. I don't know if that surprised you.
It didn't surprise me once I got into the weeds, because the main driver at the margin, new orders were very strong, but the main driver at the margins was rising supplier delivery times. So it's not the kind of problem that you want to have that makes that headline number increase. That means that you're having a harder time securing resources that you need. So I am encouraged, but at the same time, real-time data on job openings is literally collapsing as we speak. So there are a lot of cross currents in the economy right now, and we always have to bear in mind that we need to be careful when we're comparing hard data to soft survey data, which is what we get from the ISM.
And finally, we want to make a prediction. You think by the next time we hear from Chairman Powell, is inflation going to be even hotter, do you feel?
There is a very likely possibility, because as we've spoken before, rental inflation is very sticky in nature. Home price inflation really hasn't even kicked in some of these inflation metrics, and we've seen a persistence in the supply chain disruption. All of this could translate into inflation remaining too high, which has got to make Chair Powell extremely uncomfortable.
Incredible. Danielle DiMartino Booth, Quill Intelligence. Appreciate it. Thank you.
Thank you for your time.
With inflation comes shortages, and the next time you visit your go-to restaurant, your favorite dish may not be on the menu anymore. That's what's happening to restaurants across the United States thanks to supply chain woes. NTD's Phil Zoe has the story.
The National Restaurant Association says 95% of restaurateurs are experiencing supply issues, and every 3 out of 4 restaurants are forced to change their menus.
Now with the supply chain issues, many of the products that they have been purchasing have skyrocketed in the multiples.
NTD News spoke to David Gattenford, owner of Valbella Restaurant in the heart of Manhattan, near Central Park and Fifth Avenue.
We have a big problem with the fish, meat, vegetable, grocery, even some of the wine that we serve in this location.
For one of their seafood specials, the owner says South African lobster tails cost him $30 a pound on a Monday, but the following Friday, it went up to $50 a pound.
Actually, even you want to pay the $50 a pound, they said we don't know when we will have it for you.
Besides being short on food, the owner is also short on staff.
Every morning I get up, I don't know, I'm going to be a dishwasher, cook, busboy, waiter, or the owner.
In a letter to President Biden, the National Restaurant Association is asking for lower tariffs on food, drinks, and equipment so supplies can get to restaurants faster. Gattenfart says he wants to hire more people, even open a new location, but city agencies are also short on staff. His new restaurant has been delayed for over a year.
Even the government doesn't help us to expedite the process that we can put more people to work.
President Biden said he would help, starting with the opening of 2 California ports to 24 hours around the clock.
But the owner here at Valbella Restaurant in Manhattan says he doesn't plan to raise prices on his customers, even if it means he's making less money. Phil Zhou, NTD News, New York.
And a more troubling news for the U.S. economy. A new government report released today shows the U.S. trade deficit jumped to a record high in September. According to the Commerce Department, the trade gap surged to $80.9 billion. Experts point to the global supply chain crisis as largely the problem. American companies are scrambling to find parts and goods to build their products. Exports tumbling 3% in September, industrial supplies also falling. This as import prices surge due to demand outweighing supply. Despite rising oil prices, OPEC and its allies are disregarding President Biden's call to produce more oil in Biden's effort to ease soaring energy prices. During a virtual meeting today, the coalition decided to stick to its plan to gradually increase production, saying it'll increase output by only 400,000 barrels per day in December. OPEC and its partners are facing calls from the United States and other major energy consumers too, like Japan and India, to open the taps wider to help bring global prices down. During the climate summit in Scotland Tuesday, Biden blasted Russia and OPEC nations, saying their refusal to pump more oil resulted in rising gas prices. Meanwhile, the Biden administration has been trying to phase out oil drilling on public lands. OPEC members produce about 40% of the world's crude oil. U.S. gas prices have surged to a 7-year high of $3.40 a gallon nationally. China, too, is struggling under rising energy prices. Bloomberg reporting China is planning at least 150 new nuclear reactors in the next 15 years, more than the rest of the world has built in the past 35. So joining us to discuss China's nuclear ambitions and possibly the world's nuclear ambitions or nuclear future is Daniel LaCalle. He's the chief economist with the Tressis Hedge Fund, helps manage $6 billion of assets there. He also wrote The Energy World is Flat, great book. You can pick it up. Daniel, great to see you as always. What are your thoughts on China's plan? Of course, they're going through an energy crisis there at the moment. Will this help solve it for them?
I think it definitely does make a big difference because it is impossible for China or for any country, for that matter, to conduct a successful energy transition without having this help of nuclear and natural gas. It's impossible. Energy transition requires nuclear and natural gas as backup and as the energies that emit less, but at the same time provide security of supply.
And what has prevented this type of investment happening before? We see Europe, certain parts of Europe and the States as well, they aren't really even thinking about investing in nuclear to a large extent. Why do you think that is? Is it because of the history of Chernobyl or these places?
Well, it comes back to activism, unfortunately. It comes back to misguided activism that in the late 70s was hugely anti-nuclear, that used the Fukushima accident, which had absolutely nothing to do with the safety of nuclear and everything to do with building nuclear terminals in an island in which you have lots of earthquakes. But the key problem here is that activism has created a big negative effect on nuclear. But interestingly enough, in a country like France, which has 70% of its energy coming from nuclear sources, everybody understands in the country and the government understands is that nuclear is an essential factor to conduct this energy transition.
Take China, for example. I don't think that there was much activism in China over the past 50 years, right? The government or the regime tends to do what they want there. Why haven't they invested more in nuclear up until now? Is there technology? Are they lacking on the technology side?
Well, I think it's basically a combination of two factors, no? First, China did invest quite significantly on nuclear, but not enough because the state-owned and state-run coal companies were very powerful. So the dependence of the energy mix of China is also a government sort of created problem, isn't it? In the sense that the traditional utility companies that worked with coal were very powerful and remained trying to keep as much of the energy mix the way it used to be. No? So China started to develop more natural gas, more renewables, but sort of was left behind on the nuclear side. And now they're picking up on nuclear because they know, first, that coal is not the answer. Second, that they need baseload energy and fast because they have energy shutdowns.
Interesting. Daniel LaCalle, Tresses, thank you.
Thank you very much.
And the S&P 500 and the Nasdaq rose today, extending their streaks of record highs. They left the Dow behind, though. It fell 33 points, less than 0.1%. S&P 500 gained 19 points, 0.4%, and the Nasdaq added 129 points, about 0.8% today. And New York City's incoming new mayor says he'll take his first 3 paychecks in Bitcoin. Eric Adams made the announcement in a tweet today saying he wants the Big Apple to be the center of the cryptocurrency industry. Adams is going into a showdown with Miami Mayor Francis Suarez. He's also trying to attract the cryptocurrency industry to his city. Suarez said Wednesday that he's going to take his next paycheck in Bitcoin too. And Mayor-elect Adams will replace Mayor Bill de Blasio on January 1st. Business leaders there say they're hopeful they'll have an ally in the new mayor. NTD's Faye Quarter has the details.
We're headed to City Hall.
And many business leaders are happy about that. Democrat Eric Adams beat Curtis Sliwa Tuesday, and he will replace Bill de Blasio as mayor of New York City.
We're seeing a lot of renewed interest, a lot of out-migration, a lot of money that has been sitting in other states like South Florida that's anxious to return to the Big Apple. I think there's some new momentum here.
John Boyd is a principal at the Boyd Company, specialists in corporate site selection. He says Bill de Blasio is the most anti-business mayor he and his clients have ever seen.
We also counsel some of the nation's largest private developers that are excited about the Big Apple turning a page away from de Blasio and doing new brick and mortar projects. So for the first time in a long time, New York is affordable again with respect to office projects. New purchase prices are attractive. Lease rates for Class A office space in Midtown are below $100 a square foot.
Boyd says businesses like what Adams says about keeping taxes in line because New York City's taxes are out of control. They see a never-ending cycle of borrowing, taxing, and spending. He says businesses also like that Adams promotes law and order.
I think we're going to see a Big Apple comeback, and it'll be in large part due to an administration serious about safe streets and other types of lifestyle-orientated policing.
Adams, a 61-year-old former New York Police Department captain, will officially take office on January 1st.
That's stop.
Faye Quarter, NTD News.
And still to come this evening. MGM is planning to sell a famous property in the Las Vegas Strip, maybe the most famous. What's the reason?
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
What does it mean to devote your life to the truth? Does it mean investigating communist subversion here in America? Does it mean exposing the deadly fentanyl crisis in the Midwest? Or spending late nights uncovering deep government corruption? Does it mean persevering over 20 years, even after 4 masked men set one of our printing presses on fire last year? Because at a time when America's traditional values are under attack, it's the responsibility of righteous journalists to uphold truth and tradition.
Welcome back. With Facebook announcing its Metaverse, many other companies want to enter the race too. That includes Microsoft, Nike, even Tinder. Here's NTD's Evelyn Lee with more.
Tech companies are jumping on the Metaverse train. After Facebook, that's now known as Meta, Microsoft said it's also entering the race.
This is wild.
Even Match Group has its vision for a dating metaverse, including for its app Tinder. But Amir Bozorgzadeh, the CEO and co-founder of Virtue Leap, says that only Meta is in the position to create a real metaverse experience right now.
Metaverse, what does that mean? Well, it means that I'm able to not only experience one content, one spatialized piece of content, but also be able to jump between it and another one.
But what's more is that the user must have a sense of self while moving through the 3D internet spaces. Although he says it's possible that Meta could launch an early pilot version soon, a well-developed metaverse will take a tremendous amount of time. And the key point is the rollout of 5G. According to Bozorgzadeh, augmented reality is where the metaverse will be the most practical.
Sunglasses that are built in with AR features and functionalities, you'll be able to navigate through the world in a way that in some ways reflects kind of sci-fi magical stories you would read in novels, where ultimately the world could be a white blank canvas.
Business Wire reported recently that the global market for AR glasses will reach the size of 8.8 million units by 2026. In 2020, it was estimated at 255,000. So will we soon shift our lives to a virtual reality?
It's going to go through a period of extreme hype and frenzy, and then there's going to be a lot of disappointment, and then we're going to see what is left from all the debris.
Microsoft has already spent years investing in a metaverse. According to the company, Microsoft Teams will be able to start using these virtual spaces in the first half of 2022. Evelyn Lee, NTD News.
We'll see you in the metaverse soon. And the property that ushered in the modern era of sprawling mega casinos in Las Vegas is up for grabs. MGM announced in an earnings call it wants to sell the Mirage. The 32-year-old property wowed visitors with its exploding volcano and resort-style amenities when it opened in 1989. MGM bought the Mirage in 2000 to add to its portfolio, but now the company is dumping older casinos and investing overseas. Whoever buys the Mirage won't just get the existing casino. The property's 77 acres also include undeveloped land. That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.